The strong yen is stifling the Japanese economy, but it's not hurting the Oppenheimer International Bond Fund, says portfolio manager Sarah Zervos.
Well, we actually invest from a dollar-based perspective, so we gain when the yen is strong. If yields stay relatively unchanged, or they fall, we also gain. So in that sense, we're actually getting a nice boost from the yen strength this year and last year.
Clearly, Europe is falling apart. Tell me about any bonds that you really favor in Europe at this juncture.
Well, safety first in German bunds, they've been kind of a core holding and they've been the best performer this year so far as investors flee anything scary. However, we see value creeping into both Spanish bonds and Italian bonds in the core, and then in the periphery we do own Polish bonds and we look further afield in the emerging market space.
Is it worth taking the risk and buying any of the PIGS countries here?
Well, we're sitting in a very binary moment right now where the market's expecting some big policy action this weekend. We actually believe that the European policymakers are going to take the market through this and avoid a systemic financial crisis. We're not sure it's going to happen this weekend. So in that sense, we think moving into some risky assets but not a crazy overweight is the right thing to do.
Speaking of overweight in the emerging markets, you're overweight Brazil. Tell me about that position.
Sure. Brazil is one of the highest yielding, both in terms of real yields and nominal yields in the investable universe for fixed income assets. And on top of that, the central bank is very prudent in watching its inflation. They're at the upper end of inflation right now, but they know it's going to turn lower. You're getting close to double-digit yields, and the currency's been relatively strong.
Let's stay with the emerging markets. A lot of worries about bad loans in China. You hear Jim Chanos all the time saying that China is a bubble. What's your view?
Well, I think the one thing we can say with certainty is there's not a lot of transparency in the books of Chinese companies. I think some of them are actually probably great, but we just don't have a lot of comfort in looking at the numbers. So there are some probably terrific property companies, but with the extra views going into the leverage, into possibly corruption and so forth, there's just not a comfortable bet you can make.
And if China does falter, Zervo says the impact will be felt far and wide in the currency market.
It'll very likely cause some contagion into the commodity currencies more than the actual bonds, because what we saw in '09 is China was one of the biggest importers of commodities globally that did pull along countries' currencies such as Australia, Canada somewhat, but even more Brazil and Chile.